basically, it's going to be a session on NASDAQ and just going to explain a little bit of, you know, uh, uh, just a continuation of our last session on the flowing algo. So, this is NASDAQ on the daily time frame. So I'm just going to uh, remove all of those things and we just have to use the chart. Okay, so basically, uh, it's actually not complicated. It's not complicated. I want you to see this chart as a printer, right? When you put something in a printer, it prints it out. When you input something, you print it out with a printer, right? So the market is like that because when money comes into the market, it prints the direction of that money. So let's say buyers get into the market, it prints buys, and sellers get into the market, it prints sells, right? So that's exactly how the market is. And that's basically the concept I'm trying to explain today on Nasdaq. So this is a daily time frame. This is just to show you the basics. It works on all time frames, right? But to get a better accuracy of trade, you should stick to either the daily, the 3 hours, the 1 hour, or the 4 hours, or the 2 hours. So it depends. It's all it all depends on the type of trader that you are. If you're a trader who wants to trade like daily, right, you want to put your trade for as many days as possible, like 2, 3 days, or 4 days, or 5 days. Depends totally on you, right? So if you're that type of trader, you can use the daily time frame. But if you prefer to do intraday, right, you could use the 1 hour, 3 hours time frame, or any of the hourly time frames. Yeah. So basically, I'm just going to give a little bit of illustration. Yeah. Like I said before, the market is a printer. It prints money, right? Money comes into the market, it prints it on the chart, right? So now let's take a look at what's happening here. We've got like a little bit of push down from the top, right, to this low, right? So something happens on the market, and then it gives the market a bit of uh, it gives whoever is looking at the market, the trader, when looking at the market, a bit of, I'll say a chance to capitalize on what is about to happen, right? You need to understand what's about to happen before you actually get on the trade. You can just get on the trade blindly. That's gambling, right? So if you want to increase your chances and not be a gambler in the market, you should watch this video carefully and try to understand what I'm about to explain. So, so you should look at this video, watch this video carefully, and understand what I'm about to explain. So now we've got market pushing price lower to from this high, price pushing from that high. That's a 22125. They pushed lower, right? Pushed lower to this level, and you mark those lows, right? You mark the highs and the lows. Look at those mark highs and lows. You know, mark highs and lows, and you wait for those lows on the highs to get taken up, right? You want them to get taken up, and that's where you try to look for entries, right? So look at these long sales, this long daily candle sell. After the sell got closed, right? The daily candle got closed. Then following the market was slow, a little bit slow. It wasn't moving too much, right? And then the next day, that was on Friday, December 2024, the market taps that previous low, then traded lower, that's 21,047. That's about 300 points. So it traded about 300 points lower, and then it moved back inside, right? So if you see something like this, and you want to capitalize on it, you can do a 4 hours, right? Do a 4 hours time frame. You move to a 4 hours time frame. Let's see if we can get there because I'm actually on a for a trading deal. So it might be difficult to get that level. Let's give it a try. So let's go to the 4 hours. For the 4 hours, we'll call this level. I think we're able to get it, yeah. So we got this level. All right, we got this level. Yeah. Okay. Is it a good goal? I mean, I was expecting this bullish candle would engulf here. I was expecting it to engulf, but it's not the case yet. So the case here is that you can use this level, this sell, this low, this red candle, you can use it just like you marked out on the daily. You can use this. And say we've got a low here. We've got a low of that bearish candle. Or better still, if you're not familiar with something like this yet, because I would explain this in my next videos to further explain or expansion on that. If you're not really familiar with this, you can use this slow, right? Use this slow. So using this slow, it gives you that flexibility to understand that the market is coming back inside this level, right? But if you understand this low, this bearish candle, because if you go on lower time frames, you understand what I'm saying, yeah? So this bullish candle has now traded above that last bearish candle. So what we are waiting for is to see an engulfing. So I was expecting this bullish candle would engulf this bearish to give a bullish daily time frame confirmation for buys for full buy to the upside. It's about I don't know about 500 points or so to 21.9 from yeah that's about 900 points, yeah. But it did happen. So we could use this as confluence to get on the trade. So from this level, after it gets into the it gets into the this level, right? We move to lower time frames and then look for the engulfing, probably on the 2 hours. We should probably get it on 2 hours, yeah, or on the 1 hour time frame, right? So we're getting engulfing inside this level, inside this red line. If we get something like that, I'll use lower time frames to explain so we can go into lower time frames to understand what I'm trying to say. So if we get this level, right, and then it engulfs, there's a level here on lower time frame that engulfs inside this red line, I'll buy. And I would wait to see how price reacts. Yeah, and buy. So I would be risking just about 100 points for 900. That's about 901. Yeah. So now if we go back to the daily time frame, yeah, and see what's happening there. So we could have gotten in here and then wait for price to get back inside this level daily time frame, and then you could literally just hold for the day, then wait till the following week, right? So now let's look at it this way. Let's look at it this way. The market closed bullish, yeah, on the daily. It closed bullish. What we're waiting for is to see price get above this level and then come back inside of this red line, yeah. So if we go back to the 4 hours again and then see what happened, you see what I basically tried to explain earlier is that we wait for an engulfing inside. So on the daily, the market actually came back inside of this. red line. On the 4 hours, you can see it engulfed. So it was what I was trying to explain here. I was explaining that I was waiting for this bullish candle to actually engulf the bearish candle inside of this above headline. But it didn't happen. So we could actually use this, right? We could use this one. It works because it's just as though you're taking your trade from the 4 hours. Yeah. But you can see what I'm trying to explain earlier here is exactly what happened here. So the market has actually dropped back inside of this red line, right? That's like the resistance of the uh sorry, this support. It was actually supposed to be support because price, sorry, resistance, sorry, my bad. So I just dropped back into this resistance, right? And then it's not turned into a support. So you wait for price, maybe middle of this, because this is actually a long bearish candle. So you can actually wait market to just trade a little bit inside of the zone, and then you keep holding the 4 hours, it's a daily time frame. So you want to keep waiting for price to actually play out. Yeah, because it's a risk. For every trade you pick on the market is a risk. Yeah, so you don't have to panic. Okay. So let's say you're risking say about 220, 200 points. Yeah. So you're risking 200 points. They target this low where you started buying from. And that's about 500. That's about 5 to 1, right? That's risking 5 to 1. But if you're not really aggressive like me, yeah, and then you're someone who's patient, you wait for price to probably just do a little bit of ease into the middle of that level, that's very engulfing. You could make more level 7. Your risk is the same. Yeah, sorry, your risk is different. So you make more reward, which is about 8 to 1, right? Sorry, yeah, that's about 8 to 1. So you make that, you got into this buy, got into the sell, right? And so you could actually make this again. Look at this continuation buys. So the bearish candle, the next candle taps into it, then folds back into that level. So just mark it out like this. So it falls back into it. After folding back into this level, it then becomes you go into lower time frames to spot an engulfing. So once you spot an engulfing, you just keep holding and then you could actually get into a continuation part. Yeah, that's actually fair as well. It's more reasonable as well. If you couldn't get it, yeah, you could just get into this continuation. Okay. So this is how the market moves. Nasdaq. In fact, it works on gold as well. But I'm not going to show that on gold. That's for gold. Uh it's just basically for Nasdaq. Okay. So you can get this, right? It's about 8 to 1, yeah. And you can do whatever. So I'm just going to do this off. So we do a lower time frame analysis and sample and see how it works. So today, this is the trade activity today. So this is the 4 hours, but I use the 3 hours. For the 3 hours, I got this level. The market sold by this is last point, right? That's the last point. So if you go into daily, you could get this one, right? So this is daily, right? So you wait there for price to kind of like tap into the high. So you go back into that, and the market taps it on the 12s, and then it unfolds. It then goes inside. So I use the 3 minutes here, and then I go about, I think, yeah, let's check it out again. I can't remember. So yeah, this is it basically, right? So it engulfs on the 3 minutes, yeah. It taps it, then it engulfs, and then I sold. So sold here. So I sold, yeah, that's about just the point. I was actually expecting more buys, yeah. So that's why I didn't hold this off for long. So this is about 8 to 1. I was lead to for so much. And at the same time, I was buying US start as well. I was buying USD while it was selling a bit. So now let's move back to how I got the buys, yeah? So on the 2 hours again, I got this. Right, let's take this off. So on the 3 hours, I got this. You can see this one, it was above it. If it's further below, it really moves the way it is. And we got this low and this version and then traded, right? It traded lower and then it golfed in 5 minutes, or I think maybe, yeah, right. Yeah, so this is it. It golfed in the 5 minutes, and then I got in on the buy here. I bought here, yeah, and then my stop was just here, right? That's about 9 points, right? 9 points more. I stopped, and I was expecting this high, right? Where I started selling from. So, right, I was expecting here. Immediately, I didn't set my take profit, but immediately got there. I saw how price was reacting, and then I moved my TP above this level, and then I got 140 points. So I moved it here, and I got about 140 points from this trade, and that's how I got to this trade, right? On Nasdaq. So, and for Dow Jones as well, I got this. I got this. You can see I've got Dow Jones as well. I got Dow Jones. I took profit around, I think, 7.9, 7.9. Yeah, I think here. I think around there. Yeah, around there. I took a profit around here because I don't like all the indices to the following till the following day. So I took it at that level, and that's actually a very good risk reward. So you can see on the 3 hours as well, same method, the same scenario. So the market at this level, and then I waited for engulfing. I need to see an engulfing before I take the buys, yeah. So on the 5 minutes, think on the 5 minutes, yeah, waiting for the engulfing. So it wasn't on the 5 minutes, I think it was on the 2 minutes. All right, so this is it. So I waited for this engulfing on 2 minutes. I think for me to pick that low, it would have happened on the 1 minute. Yeah, so I think it's probably on the 1 minute. So let's see if I was right. Yeah, yeah, yeah. I took it on the 1 minute. So you can see I picked my engulfing from the 1 minute. Market went up, then traded back down, and then I kept on holding because the market would push up anyway. So, and then the market started pushing up aggressively, and that's it. That's it. It's not really difficult. It's as simple as that. So that's basically how it's done. I hope you understand, and I'll be back with uh, next series on how to get on it, how to get how to get on this, and to further explain it, further explain the scenarios as I see new outcome. So in order to put you guys, up to date, I hope you understand, and I wish you good luck and good trading.